Yeah, I probably don't even need the microphone. Generally, people can hear me with no problem, but I'll use it. So Desert Hawk Gold is maybe a little bit of a unique opportunity at this conference because, we're a private company that actually has a full reporting status with the United States Securities and Exchange Commission. We file 10Ks and 10Qs and 8Ks and have for a while. So our financials are completely transparent, but we don't trade and we don't intend to trade anytime in the near future. We have no interest in listing in Canada, and none whatsoever, and we won't list for trading in the U.S. unless and until we're prepared to list on the NASDAQ with a liquid market. In the meantime, we're actually fully funded for the operation and development of our mining project, and we actually are in production now at an annualized rate of 15,000 ounces per year, at a cash cost of $695 per ounce and a full sustaining cost of just under $750 an ounce. This is a photograph of our mine in western Utah. I'm not going to take you through our entire PowerPoint. We're happy to provide that to anybody who would like a copy, either electronically or a physical copy. I will just go through the quick summary of the company's project. As I said, we are a fully permitted operating open pit heap leach gold mine with a sufficient resource for our existing mine plan of 6 years at 15,000 ounces per year. We're located in Utah, which obviously is a fairly secure mining jurisdiction. The largest copper mine in U.S. history is just about an hour and a half away at the Kennecott Bingham Canyon mine. And we're actually very, very close to the Nevada border, just about a mile from the Nevada border. We have a very, very large resource expansion potential around our existing open pit and along the 2-mile-long trend that covers what we call the Kiewit deposit. And we've just acquired another large block of patented ground directly on trend that was explored by Newmont. Over the last 2 years, they spent over $5 million on this particular property, and I'll talk about that a little bit more in a minute. Our Chief Executive Officer, Rick Havenstreit, who's down making a presentation right now to another investor, has actually built and operated 16 different heap leach mines over his 40-year career. So we have a very experienced management team on site. We've got 50 employees at the mine and processing plant at the moment. We believe our current valuation that we're establishing at this time is fully underpinned by the existing production and cash flow. And so we believe that over the next 1.5 to 2 years, we will have a substantial valuation re-rating from a very large resource expansion potential, which I'll talk about here in a minute, and the fact that we will also be increasing our production as a result of what we're doing. So as I mentioned, we are not trading. We don't list the stock for trading on the bulletin board. We will not trade in Canada, and until such time as we decide we want to list on NASDAQ, we will remain private. Again, the location of our project is just across the Nevada line in Utah, south of Wendover. I'm going to skip over these slides to get to the important one here. Oh, I went too far. Maybe that's back. No, let's go forward. There we go. So this is a look at our land position, and if you see here, our existing mine plan from which we're producing 15,000 ounces annualized production, and for which we have adequate reserves at that rate to go for at least another 6 years, is all contained within this small area of what we call the Kiewit pit. This trend is 2 miles long. We have already done substantial surface exploration with some drilling immediately to the south of the pit and immediately to the north of the pit, encountering exactly the same type of material or grade intercepts. On Rainbow Hill, which is on our existing property, we have substantial surface outcrop of exactly the same material. And then the property we just acquired, the Simpson ground, is on patented claims. Over the past few years, Newmont spent $5 million on and around the Simpson property. They did substantial surface exploration and geochemistry and drilling and identified exactly the same material that we see and that we're currently mining in the Kiewit pit. So their geologist had recommended continuing their program on the Simpson ground. He told the senior management at Newmont that there was easily 2 million ounces of visible gold to be discovered and developed there. They said, "Can you show me where there's 5 million ounces?" He said, "No, I can show you where there's 2 million ounces." and they said, walk away. So Newmont walked away, and we acquired the property outright. So we now have the entire 2-mile-long trend. We believe it's almost certain that we will develop somewhere between 2 and 5 million ounces, with probably at least 1 million ounces mineable by open pit methods, similar to what we're doing at the Kiewit. So all of this information that you would see in our presentation, which we're happy to provide to you by either by electronic means, was developed by a third-party engineering firm. So these are all their numbers, not ours. We don't really argue with them much. They're maybe a little over-conservative. They're showing overall operating cost of $10.23 per ton, direct cost of $7.95, and overhead expense of $2.29. We think it's probably a little under $9, but nevertheless, it's substantially profitable at even their number levels. So our management team is really Rick Havenstride, our Chief Executive Officer, who, as I mentioned, has 40 years of experience and has operated and built 16 open pit heap leach copper and gold mines. I'm here as chairman of the company. Our other 2 outside directors are Philip Holm of H&H Metals and my longtime partner, John Ryan. So our capital structure, we have 26.6 million shares issued and outstanding and 2.4 million options. To date, there's been $30 million spent or invested in the project, about half and half debt and equity. We currently have basically an agreement with a mine financier that has given us $14.2 million in essentially advanced gold loan type debt. We would like to raise another $5 million at a market cap of $31 million. So we're basically valuing the existing business at the cash we've actually spent to develop, explore, permit, and build an operating open pit profitable heap leach gold mine. We think that with this $5 million, and even without it, we will grow organically from our existing cash flow. We should produce somewhere around $7 million operating profit in the next 12 months at 15,000 ounces per annum. But with an additional $5 million, we believe we can rapidly increase the output to around 25,000 ounces per annum, and we can rapidly increase the resource base. So a post-money valuation, assuming we sell 5 million shares at $1, would be $31.6 million. We think that with the work that we can do over the next 1.5 to 2 years, we can create a substantial re-rating of the value of the business at least 5 to maybe 7 or 8x the $31 million post-money valuation. So that's our story. It's pretty simple. We're a gold producer, we're a private company, we have experienced management, we have a huge exploration potential to expand our resource and also expand our production. So we're only looking for patient investors that recognize that. Anybody that has, hot desire to get public and start selling their stock, we're not your deal. So there we are. Any questions? And I probably don't need my full 10 minutes. Okay, thank you very much. I'll give you back some time.